One of President Trump's top advisors, Kellyanne Conway, recently ignited a firestorm over the Trump administration's use of alternative facts. Why is this such a big story? Alternative facts are nothing new. They've been around forever. They're just coming to light more often because of the speed of information. Alternative facts were recently presented right here on the front page of the Wall Street Journal, America's preeminent daily financial newspaper, on the day after the Dow Jones Industrial Average topped 20,000 for the first time ever. A chart shows the Dow rising gently for over 100 years across the bottom of the page. And then, from 2009 onwards, the index scales one peak after another, climbing the side of the page to reach record heights. The article is filled with alternative facts, promulgated by a nationally known expert. Greg Ip, a distinguished financial reporter who has worked at The Economist as well as the Journal, says the U.S. economic expansion is old and lost its momentum. Ominously, according to the Journal's analysis, the bull market is built on a fragile economic foundation. But this conclusion is predicated entirely on alternative facts. Ironically, the Journal's own research contradicts the article's frightening outlook. The Journal surveys about 70 economists every month, and they expect growth to accelerate steadily at a 2.4% rate over the first 3 quarters of 2017, while the latest quarterly growth rate of 1.9% for the fourth quarter was below the economist expectations and much lower than the 3.5% growth spike in the third quarter of 2016. Calling the economy fragile is an alternative reading of the facts. The 4 factors of GDP growth are shown in these charts. Consumer activity and business investment both showed strong growth of 1.7% in the fourth quarter of 2016, according to the latest monthly data. Consumer activity accounts for 70% of the economy and is the dominant factor in growth. Yes, consumer spending declined in the most recent 2 months, but it's only slightly off levels rarely seen. And, more importantly, the long-term trajectory remains in place. GDP growth was set back by a 1.7% drop in net exports in December, but that followed November's surge in soybean exports to China. Dollar strength and global economic crosscurrents both contributed to the December decline, and trade balance volatility is likely to revert to its long-term mean and simmer down. Contrary to the alternate reality depicted on the front page of the Wall Street Journal, the U.S. leading economic index rose by a very strong 0.5% in December. The LEI is the best forward-looking index of the U.S. economy. It's compiled by a private business association called the Conference Board. The LEI has plunged for several months prior to previous recessions. Nothing like that is happening now. Quoting the Conference Board's latest monthly LEI press release, December's large gain was mainly driven by improving sentiment about the outlook and suggests the business cycle is still showing strong momentum in the final months of 2016. In the same press release, an economist from the Conference Board said the LEIs were suggesting that the economy will continue growing at a moderate pace, perhaps even accelerating slightly in the early months of this year. Despite these facts, the front page of the Wall Street Journal this past Thursday reported that the Dow run-up to 20,000 is built on a fragile economic foundation. Here's another important fact flying in the face of the reality written across the front page of the Wall Street Journal last week on the day the Dow topped 20,000. The level of optimism among small business owners is unprecedented. Whatever you may think of the new president, the change in sentiment about the business climate is astonishing. The Journal's alternative facts branded the economy as shaky, and its front-page editors basically said the bull market was over, despite surging optimism by small business owners. Back on Main Street, the monthly index of small business optimism surged like never before in its 30-year history. The National Federation of Independent Businesses, NFIB, has tracked this index for over 3 decades. The 38-point spike in optimism after the surprise election of Donald Trump is stunning. The story made its way into the national press, but was not mentioned among the alternative set of facts on the Journal's front page. The NFIB Economic Monthly reports are kind of like watching paint dry. Business owner optimism is not wildly volatile and tracks with economic cycles. Monthly commentary from NFIB's economists is measured and never hyperbolic. Words like rocketed and stratospheric are unlikely to have been used before by NFIB in its monthly press release. In the release, NFIB President and CEO Juanita Dugan said, "Small business is ready for a breakout, and that can only mean very good things for the U.S. economy." The Standard & Poor's 500 stock index, which measures the value of America's largest publicly held companies, did hit a new all-time high again on January 25th, along with the Dow and the small company Nasdaq Composite Index. Despite the bright outlook for the U.S. economy and the global economy exhibiting strength not seen in about a decade, investor sentiment could change at any time. There are many instances in U.S. post-war history in which a stock market correction, or bear market, occurred during a period of economic expansion. No one can predict the future. What is certain is that alternative facts are nothing new. Not to pick on the Wall Street Journal, but for America's most important financial newspaper, to call the economic foundation of the stock market rally fragile flies in the face of the facts. Economic growth is expected to accelerate in 2017, and small business owner optimism, a powerful force in driving jobs and income, just spiked more than ever in its 30-year history. What's most ironic about alternative facts making the front page of the Wall Street Journal on the day the Dow hit 20,000 is that it's actually really good news, and good news is what drives markets. As long as the perception remains widespread that the stock market rally is built on a fragile economic foundation, the bull market could continue to climb a wall of worry. To be clear, there are still investors who have yet to capitulate and become bulls. Kellyanne Conway is not the only one relying on alternative facts. She just made us notice them.